Hi, in this video, we will solve the third complete comprehensive example for the chapter Dissolution of Partnership Firm. So let's go to the example sum. Example sum. Following is the balance sheet of Arvind and Balveer as at 31st March 2019. The balance sheet is given to the left of the screen and on the right additional information. The firm was dissolved on the above date under the following arrangement. Point A. Arvind promised to pay off Mrs. Arvind's loan and took stock at rupees 6,000. Point B. Balveer took half the investments at 10% discount. Point C. Book debts realized rupees 28,500. Point D. Trade creditors and bills payable were due 1 month after 31st March but were paid immediately on 31st March at 2% discount per annum. Point E. Plant realized rupees 37,500, building rupees 60,000, goodwill rupees 9,000 and remaining investments rupees 6,750. Point F. An old typewriter written off completely from the firm's books, now estimated to realize rupees 450. It was taken over by Balveer at this estimated price. The final point, realization expenses were rupees 1,500. We are asked to show the realization account, the partner's capital account and the bank account. We'll begin with the realization account, followed by the partner's capital account and then the bank account. Any working note we will do after this sum. Please note, in this example sum there is no partner's loan account, so we don't need to prepare partner's loan account. Loan has been borrowed by firm from Mrs. Arvind and Mrs. Balveer. So that's an external liability. Solution. Realization account. Left side debit side, right side credit side. We have particulars, rupees, particulars, rupees. We'll begin by transferring the sundry assets. To sundry assets transferred. Stock, the amount is 7,500 rupees. Investments, 15,000 rupees. Book debts, 30,000 rupees. Building, 22,500 rupees. Plant, 30,000 rupees. And finally, goodwill, 6,000 rupees. The total of the assets transferred is 1,11,000. The credit side of the realization account, we'll begin with the provision for doubtful debts. 3,000 rupees by creditors account, 45,000 rupees by bills payable account, 12,000 rupees by Mrs. Arvind's loan, 7,500 rupees, and by Mrs. Balbir's loan, account, 15,000 rupees. There's an investment fluctuation reserve, a reserve corresponding to the asset of investment. So we'll transfer that also to the credit of the realization account. $1,500. Let's start with the additional information. Point A says Arvind's promised to pay off Mrs. Arvind's loan. So, partner taking over a liability to Arvind capital account for Mrs. A's loan. The amount of loan, 7,500. Arvind also takes over asset stock at rupees 6,000 by Arvind capital account for stock taken over. Value at which it's taken over is 6,000 rupees. Point B, Balbir took half the investments at 10% discount. So by Balbir capital account, investments, half of the investment is 15,000 rupees divided by 2, 7,500 minus 10% discount, 750 rupees. So it's 6,750 rupees. So the investments are taken over at the value of 6,750 rupees. There is one more point in point F, that an old typewriter written off completely from the firm's books, now estimated to realize 450, and this was taken over by Balbir at this estimated price. So unrecorded typewriter taken over at 450 rupees. Total of assets taken over, 7,200 rupees. Let's go to point C. It says book debts realized 28,500. So realization of assets by bank account, book debts, amount realized 28,500 rupees. We'll come back to point D, payment of creditors and bills payable. Point E, plant realized 37,500 rupees. Building realized 60,000 rupees. Goodwill 9,000 rupees. And the remaining investments realized 6,750 rupees. Total amount realized from sale of assets is 1,41,750 rupees. Next, let's deal with point D. It says trade creditors and bills payable were due 1 month after 31st March but were paid immediately on 31st March at 2% discount per annum. So it's to bank account. You are paying the creditors and the bills payable. Let's go to the working notes to find out the amount of the discount. Working note 1, calculation of amount paid to creditors and bills payable. Discount for creditors. The amount of creditors book value is 45,000 rupees. The rate of discount is 2% per annum. And it's not a flat rate, it says per annum. So we'll find out the discount for 1 month. ₹75 is the discount for creditors, 1 month's discount. Therefore, amount paid to creditors is equal to 45,000 rupees minus the discount 75 rupees or rupees 44,925. Let's insert this in the realization account. Amount paid to creditors 44,925. The amount of the bills payable is 12,000 rupees. Discount for bills payable ₹12,000 book value of bills payable at 2% per annum for 1 month. Discount amount ₹20. Therefore, amount paid for bills payable is 12,000 rupees minus the discount of ₹20, or in other words, rupees 11,980. So let's enter that also. ₹11,980. Total amount paid 56,905. Next, point G, the realization expenses were 1,500 rupees to bank account for the expenses. 1,500 rupees. The items in the additional information are done. We need to check if all liabilities have been dealt with. We paid off the creditors at a discount. We paid off the bills payable at 2% discount. The loan of Mrs. Arvind was paid by Arvind. It was taken over by Arvind. However, loan by Mrs. Balveer hasn't been paid. So we need to pay it off at book value. That is the assumption which we need to make if any liability is missed out and not dealt with, external liability. So bank account Mrs. B's loan. The amount of the loan is 15,000 rupees. The items are done. I'll remove the split and we can find out the gain or loss on realization. We'll total up the credit side first. The total of the credit side is 2,38,950 rupees. The total of the debit side is 1,91,905. The greater total on both sides, 2,38,950. On deducting 1,91,905, we get gain as 47,045. So to gain on realization, transferred to partners' capital accounts, we have Arvind and Balbir. The total gain 47,045. There is no mention about the profit sharing ratio in the problem, so we will distribute it equally 1:1. So it's 23,523 for Arvind and 23,522 gain for Balbir. So this is a realization account. Next, let's go to the partners' capital accounts. Partners' capital accounts. Left side, debit side. Right side, credit side. We have particulars, Arvind, and a column for Balbir. And on the credit side again, particulars, a column for Arvind and a column for Balbir. We'll bring down the balance of the capital accounts by balance brought down. 15,000 for Arvind and 15,000 for Balbir. We will distribute the reserve fund. Profit sharing ratio equal. So 15,000 in 1:1, 7,500 rupees for Arvind and 7,500 rupees in the case of Balbir. There's a profit and loss account on the asset side of the balance sheet. We will write it off to profit and loss account to be written off in 1:1, 2,625 for Arvind and 2,625 in the case of Balbir. We'll check the realization account for any entries. On the debit of the realization account, we have to Arvind's capital account for Arvind taking over his wife's loan. So by realization account, for liability taken over, under Arvind, 7,500 rupees. And on the credit side, we have Arvind and Balbir taking over assets to realization account. Asset taken over. Arvind takes over rupees 6,000 of asset and Balbir takes over rupees 7,200. Finally, let's transfer the gain on realization by realization account. For the gain on realization, it's 23,523 for Arvind and 23,522 in the case of Balbir. We'll balance the accounts and get the amount of the final settlement to bank account for the final settlement. In the case of Arvind, credit side is greater. Total of the credit side is 53,523. And on subtracting, the total of the debit side, in the case of Arvind, it's 8,625. We get 44,898 rupees as the balancing figure. For Balbir also, the credit side is greater. $46,022 and the difference 46,022 minus the total of the debit side 9,825. Comes up to 36,197 balancing figure, the figure for final settlement. So this is the partner's capital accounts. Next, let's prepare the bank account. Bank account. Left side debit, right side credit, particulars, rupees, particulars, rupees, The bank balance on the asset side of the balance sheet, 12,000 rupees. To balance brought down 12,000 rupees. That's a cash balance. We will deposit the cash in the bank. Bank account debit to cash account is the journal entry. So to cash account, 750 rupees. Let's check out the cash or bank entries in the realization account. Liabilities paid off. Creditors and bills payable are paid 56,905. So by realization account, for the liability paid, 56,905. Expenses paid by realization account, for the expenses, 1,500 rupees. Payment of Mrs. Balbir's loan by realization account, Mrs. B loan paid, amount 15,000 rupees. And on the credit side of the realization, total amount realized from sale of assets to realization account, assets realized, ₹1,41,750 rupees. We'll scroll down to the partner's capital account to get the amount of the final settlement by Arvind capital account. Final settlement, the case of Arvind, 44,898 rupees. And by Balbir's capital account, the amount of final settlement, the case of Balbir, 36,197. The entries are done. We will check if the bank account tallies. The debit side total is 1,54,500 rupees. And the credit side also totals to 1,54,500 rupees. Both sides tally. We know our arithmetic is correct. I'll remove the split and we can view all the accounts together. So this is the realization account. Followed by the partner's capital accounts. And then the bank account. Followed by the working notes.